Investors yank over $100 billion from hedge funds in 2023. In December alone, roughly $26 billion from hedge funds was removed from investors. This tipped the total outflows from 2023 alone to $103 billion compared to $112 in 2022. And this year is no different. Short sellers are getting slaughtered. They were down about $200 billion before the S&P 500 rallied another $30 and some change. We're going to get into the overall market a little bit later, but AMC, we have kind of a catalyst that just dropped. And it's Jim Cramer. He says, in quotes, "We don't want AMC. AMC's not doing well. We want stocks that go higher. The consumer's not going to the movies like they used to." This is wrong. We see box office catching back up to pre-COVID levels, and also theater revenue beating some of that of streamers, etc., etc. This came in Cramer's lightning round, saying that he doesn't want AMC. And if you don't know Jim Cramer, you basically always want to bet the opposite. Now, as the media is pushing a negative narrative, there are even more news outlets all of a sudden commenting on Adam Aron's tweet, throwing shade with clear as day paid hit pieces, bashing AMC as a company, bashing AMC as a whole. Even financial and sports news posting about AMC, which doesn't make any sense. Now guys, we got a lot of stuff to talk about. I'm going to ask in return, it's free, just click the like button, or if you really have to, just smash your head into it if, you know, the day's going rough. As long as you get that thing clicked for me, I do appreciate it. Now, AMC off-exchange and dark pool summary. Today's off-exchange volume is 5.999 million, which is 56.59% of today's total volume. This was yesterday, and today's lit volume was 4.6 million, which was 43.41%. Now, over the past 30 days, AMC has traded more dark pool volume over lit volume. Dark pool coming in at 51.75% and the average lit at 48.25%. And this is consistently on a consistent basis, right? It's not only over the past 30 days, which means that over half of the orders that are going through to buy or sell AMC are through the dark pool, are not affecting the price. And that is exactly why you see barcoding day in and day out. So a large part of the problem right now, as the controlled price and how it's moving, right, is the dark pool. I know this comment came up in yesterday's video, and a big problem is the dark pool. Now, before we get into AMC's chart, I wanted to talk about, I was going to buy calls on AMC, and we're going to get in the charts in 1 second, why I was going to do that, right? Some of you may not be fond of that. I don't buy them close. I don't buy them unless I think they will hit, etc., etc. But IV is pretty high for AMC. But looking at IV, when I was going to purchase contracts, they were up some over 200%, some over 100%. Sometimes I'd like to look around 40 to 60% at most for IV. AMC has been pretty high. Not only that, but Ortex short interest has been rising day in and day out, coming up to around 11%, which is one of the highest reported short interests we have seen on AMC, coming up towards more and more highs. So once we break 11%, things should get interesting. Now, touching on AMC's chart, $4.19 down 1.87% on the day. Nothing has changed, and I'm going to show you that. Touch point, touch point, touch point, touch point. We are sitting right here, hugging the trend line before that breakover. Just because it's lasting an extra few hours, an extra day, right? An extra 12 hours doesn't mean anything. We are still right here. Wait for that break. It's coming. Wait for that break. And this is all in my opinion. If it breaks down, what can I say, right? But as of right now, it looks good. I'm waiting for that break, and I think it's right here, right around the corner. Note, volume all the way from up here, slowly on a decline, really fading, volume exhaustion right here. There are plenty of things that show a sign of a reversal, not to mention what we're tracking is playing out exactly to a T. And to add even better on that, this is taking off even further. This is taking off perfectly as we anticipated. Ethereum Classic, which AMC and Ethereum Classic track each other. 25.27 going for that second leg up. Watch for a break back over 26.75. And then a scale higher on Ethereum Classic to break over $45. I think this is coming, especially with the bull cycle coming up in crypto, and we're going to touch on crypto later. But AMC still, in my opinion, setting up strong for a move. You guys let me know your thoughts in the comments down below. And we do have more stuff to touch on AMC, but I just want to cover GameStop's chart real quick. $14.56, down 1.49% on the day. As of right now, we got this W pattern formed out, and now we are accumulating right here. I'm watching for a break from GameStop into $15.10 to $15.85. as for the next level of resistance for accumulation in this zone, and then to potentially break higher. This is what I think it's going to do. I think it's going to come hug this trend line just like AMC is doing, and then break higher for GameStop. I think it has a good chance to do that. Now AMC, 7,000 calls expiring in the money for the week, but there are about 18,000 puts expiring in the money, and then 70,000 calls expiring out of the money. Premium going to market makers. Options chain isn't that crazy, honestly, until March 15th of 2024, when the Fed will potentially cut rates. So that is a large options chain as well. And then February 16th isn't bad either. AMC short exempts have also been dying down. 78,000, 88, and then 85, and this is down from hundreds of thousands. GameStop has 80,000 shares available to borrow, 3,000 calls compared to 1,000 puts, and then a lot more people betting bullish out of the money as well. So GameStop is winning on the options chain, forming that W pattern. Short exempts are also low. GameStop is looking like a little bit of a better setup. Now, something that isn't really positive. The Federal Register just dropped self-regulatory organizations, stating the Options Clearing Corporation notice of filing of proposed rule change by the Options Clearing Corp concerning its process for adjusting certain parameters in its proprietary system for calculating margin requirements during periods when the products it clears in the markets it serves experience high volatility. So the OCC is once again proposing the rules that would screw retail. The OCC is proposing a regulation change to cut margin requirements during periods of significant volatility in order to prevent clearing members from defaulting, as this would essentially start a domino effect that would shipwreck numerous clearing members. So this type of margin decrease is only a type of financial crisis situation that they would have to implement to save their own assets. By lowering margin restrictions, everyone is able to increase their leverage even further. So you wouldn't want, this to go through, let alone for a market crash, but you wouldn't want it to go through for any time being, because that means they would be able to increase their leverage even further when there isn't times of high volatility or isn't times of distress. Now again, this is just dropped as a proposal once again, so this is not finalized. Moving on, Bank of America estimated $4.39 billion of potential losses that could be experienced due to credit risk for the calendar year of 2023, also known as provision for credit losses. We touched on JP Morgan having the same issue, but Bank of America is in no way safe as well. If you do want to read the rest of this, feel free to screenshot it. But since we are speaking of banks, Marcus, Goldman Sachs' online banking platform, is now offering 449 times the annual percentage yield income on savings account than the competitor and other global systematically important banks. This means, in efforts to retain their current depositors as well as entice would-be depositors, Goldman is saying we will pay you 449 times the yearly income that Chase or Bank of America will if you keep or bring your money with us. Now, what's interesting about this is their APY is a substantial amount greater at 4.5%. However, you can safely get a better 8.1%. That is through my link for Mumu. There's honestly no reason to leave your money in a bank account when you could earn 5.1% for the entire year and then 8.1% for the next 3 months when you leave your money in here. This is also when it's not being traded, so you can trade your money and then leave it and let it collect. Also, you're getting up to 15 free stocks once you sign up and deposit. If you use my link in the top of the description, open an account and make a deposit and get those free stocks, you can sell them and let them earn money. Go look back at it in 5 years and see what that money turns into. None of this is financial advice, and I am not a financial advisor. Thank you, Mumu, for those benefits. And also, guys, get in the Discord. The link is right under the video. But let's get back to the overall market. SPY is trading at 491.18, basically sideways on the day. Broke above this resistance level. We said it was fighting this channel. It had kind of a flat top pattern here. Broke above, and now we are hitting resistance right around 491.50. SPY is accumulating. It is still looking strong, and as the SPY climbs, it just gives better odds for AMC, GameStop, and the crypto space. Looking at crypto, 43K. Bitcoin, same thing as the SPY, broke above a resistance level, and now it is sitting sideways as we speak. One more touch on Bitcoin. Binance partners with Swiss banks for enhanced crypto custody. Finally, a touch on Tesla, 193.53, up 1.37% on the day. Broke above this channel right here, came back down, and is basing off of it. Tesla looks beautiful for another leg up after today. I think today will close a little bit down under 193.50, probably close around 192.45. and then tomorrow either wick below in the morning and then climb, or just climb for the rest of the day. Watch for a clean break over 197.60 on Tesla, and then coming all the way up to about $206. And we took a trade yesterday in the trading challenge on Disney. $96.24 broke out of this level. And honestly, in my opinion, I'm just waiting for Disney to come down base. I'm not really worried about it. I raised the stop a little bit. Even if we do get stomped out, it won't be a large loss on this position. Overall, trading account doing somewhat well, and I will be watching Disney to see if this thing has room to scale higher and has more strength going forward. Overall, guys, make sure to get in the Discord. I'm in there on the daily. We have option trading alerts in there, and you can come talk with me. I also post my positions, and we have more things coming. Also, guys, don't forget to use my link, sign up for Moomoo, and make a deposit. Let me know your thoughts on AMC going forward. Do you think we get this smash through and breakout? Because I still stick to it. If you're watching the 1 minute chart, the 1 minute candles day in and day out, you might be stressed out, but just don't worry about it. Remember, we've been holding for years. What is another 24 hours?